Hello and welcome to Beyond the Deal, the show where we go deeper than the numbers and we talk about the tips and tricks that lead to success in life and business. In today's episode, my guest is Tim Ensmann. Now, Tim actually is co-investing with me on the Eureka Springs deal in Arkansas, so we were just there together. We had an absolute blast visiting that property, but he's got such a unique and amazing story. Like most, he comes from the corporate sales world and he used the leverage of real estate to escape that life, but he took it to a whole nother level by actually buying a boutique hotel and going to live on the property in the hotel during the renovations. And it's such a fascinating story. So can't wait to share that with you. Let's get right into the episode. Timothy Ensmann, welcome to the podcast. So happy to have you here.
What's going on, Michael? Thank you so much for having me.
Yeah, I'm glad we could get you on. We had so much fun the other week in Arkansas, and I thought, hearing your story, it would be the perfect thing to share with my audience. Now, for my audience who doesn't know anything about you whatsoever, why don't you tell the people what you have going on in life right now?
Yeah, and now that the jitters and adrenaline are officially gone after the Polaris ride, I think it's good to be back here and back to normal. And yeah, man, scaling what we got. So right now we are under contract together at Eureka Springs. So we're super pumped about that deal in Arkansas. Really cool market. I think there's potential for future stuff there. And then we're also under contract with 2 boutique hotels in Blue Ridge, Georgia, which we're really excited about. We can get into this a little bit on the show, but the whole concept of what we were trying to develop at the Pine Tree Hotel started in Blue Ridge, Georgia. So we had some really solid, top performing luxury vacation rentals in Blue Ridge. And that really spawned the idea of, oh man, if we could have multiple of these and shared amenities and build that sort of communal experience, that'd be really cool. So it's awesome to be back where we started.
And for a lot of people who end up in the boutique hotel space, it's usually because they started in the Airbnb space. And I know you did, so we'll get into that in a second. But you weren't always a real estate investor. How did you end up here?
So I've hopped around a little bit. So I started actually in tech sales. And before that, I was in the process of about to go to pharmacy school. So my brother's actually a pharmacist. My whole life, I went to school to get good grades to potentially go into the medical field. And I got out of school, and that was I never actually had a backup plan. My backup plan was be really good at school, but get really good at soccer. So then when that fizzled out after I got back from England, I'm like, okay, I got to figure something out. So it was 4 more years of school, or it was going to sales, which I had a good friend of mine that joined a small tech company here in Tampa. And he said, hey, you should apply for this job. And it was amazing. It was awesome. I made more money my first year, out of college than I probably would have made my first year as a pharmacist and 0 school. So that was exciting. I was working with great CEO, really good team. I had climbed the corporate ladder. I'd bounced around to multiple tech jobs, all, sales development. So very outbound sales. And that had been a lot of fun, met some really cool people, had a good career there. But I think as many people go through this natural progression of it's like, oh, this is great, I'm making money, but oh man, I'm paying a lot of taxes. Is there something I can do to sort of shelter that? And I went through the whole process of I bought my first home, and then I had been investing in single family homes, and then realized that's really not that fun. There's not a lot of cash flow, and I needed to go bigger. So then I sold all of those and went into multifamily, which made a lot more sense. And from a business perspective, it made sense. It was super passive, so I didn't have to spend any time there, which I really enjoyed. But then as I started running the numbers a little bit, I wanted a little bit more hands-on experience, just because when I did the numbers, I'm like, okay, if I'm making, 7% pref, I need a couple $1,000,000 in these deals to be making any real cash flow. And that's where I found Airbnbs. And funny enough, I was talking to my brother about this the other day. I actually got into Airbnb because, well, 1, I love skiing and I love travel. So that was just an immediate pull. But 2, I was looking for a way to offset some taxes because I had some big commission checks come in. And I was like, well, if I can buy an Airbnb, do the cost seg, and have depreciation, I can manage it myself. And then I'd be able to save on some taxes. So that was an amazing experience. I got a place in Park City, Utah, which was my first Airbnb, just because I love skiing. So I said, hey, if I break even and friends and family can come stay, that's a win-win. Our first booking was like 40 something grand. So it covered like the mortgage for half the year. Granted, it was for like 2 months. So it was a 2 month booking. So that wasn't in a weekend. It was awesome. And that sort of cut my teeth into remote management, being able to manage a property completely across the country, some design, some renovation, all of that stuff. And at the time, my business partner, Isaac, who has done the Pine Tree Hotel with me, and we're continuing to expand the boutique hotel portfolio, he was doing something similar. So he had his first short-term rental in Palm Springs. We were talking, we were getting excited about it, and we quickly scaled up that portfolio. So we did collectively 20 deals, and they were all over Scottsdale and Palm Springs and Blue Ridge, Georgia. So then you start to realize how important it is to have teams there and how important it is to develop scale within those markets, right? Like we needed to spread some of those costs for the maintenance people, the pool guys, all of that stuff over multiple units. And we decided, let's just focus on where we want to be and go a little bit bigger. And so we sold some of those, rolled that into our boutique hotel, which is the Pine Tree Hotel. And after seeing the demand for these curated experiences that are this hybrid between, Airbnb and hotels, but they have the flexibility to really do what you want on the property. You can have group events, you can have weddings, you can have, your birthday party, you can do pickleball tournaments, like all this stuff. We were like, wow, we're onto something here. So that's why more recently, we've just really been focused on leaning into those experiential types of projects.
Cool. So a lot to unpack there. I want to go back a little because you said some really interesting things that I think our listenership will find, truly valuable. And that's, first of all, if you are investing in single family long-term rentals, you're not going to make any money. I'm sorry. Just flat out. I think the average cash flow per door is like $200 to $300 a month. And that was back when I was doing it like 5 years ago. It's probably much worse now, right? So there's something there. And then the logical progression is, well, okay, at least I can get the leverage of multifamily and commercial real estate and do it completely passively. But you're also right. Multifamily, it's not going to cash flow. It's not a get rich quick thing. It's a make your money in the long term through steady, slow growth. But 7 pref, I mean, these days, you might be lucky to get 6, right? So you're right. You need a couple $1,000,000 to make it meaningful. So you did what, LPs into multifamily deals, or were you a GP on any of those?
Yep.
LPs. Okay. And then you said, well, I want to go skiing, so I'll just buy an Airbnb.
Yeah, you put, 50, 100 into multiple deals like that. And you're like, well, I think I'm going to buy something that I can go use. So then I bought, a ski condo because I said, all right, if I put 50K into this, and it doesn't matter if it cash flows or not, as long as I'm going to get the appreciation, because I don't think prices in Park City are going anywhere. And I operated it like that. So it was more of a passion side project that turned into something that was the aha moment for me. I guess the biggest aha moment was you can make half your mortgage in one booking. So coming from a sales and sports background, that's exciting, because if that's a lever you can pull, if there's no limit on the income, and I say that with a grain of salt, but if you have opportunity for upside to charge a premium because of an experience, that means you just have to be better than the other offerings. And I really like that. So that lever is, I think, pretty critical, especially in today's environment. You can only get so much out of, right, someone who's staying there long term, or just some of these other vehicles where term, you can there's a growing trend. People will pay for experiences over things. And if you can deliver a really good experience, that's pretty accessible. There's a premium for that.
Yeah. And, you mentioned Palm Springs, you mentioned Blue Ridge, Georgia, Scottsdale, Arizona, Park City, Utah. The market matters, right? These are all, I don't know, bachelorette party destinations, ski destinations, camping, hunting, fishing destinations, right? There's a reason that people go to these places. And usually when they go there, they're looking for somewhere short-term to stay. Now, however, Airbnb has one small caveat, and that is that you are capped on your sale price. Basically, the price of your neighbor determines the price of your property, regardless if it's pulling in $500,000 a year or anything like that. There's no cap rate valuation. So in a single family home, your value is entirely determined by the comps. So I'm assuming that's what pushed you in the direction of boutique hotels. Am I correct?
That was definitely a big factor in it. I will say, so we just sold an Airbnb in South Bend, Indiana, near Notre Dame campus, and that place printed money. It crushed. And we were able to get a higher price because of the income, but you're exactly right. It's still a residential property. So it's on you to prove that to your buyer. And then once again, if the market doesn't support it, let's say you're trying to get this crazy cap rate, like, there's a ceiling on what you can get, even if the income does support it. So yeah, that's a huge, when you think about, okay, especially taking on investor capital and things like that, it's like, I want to know, I have a pretty good assumption of what the exit is going to look like. And when you're boutique hotels, it is commercial real estate. You're not talking about residential real estate. Therefore, the income does completely dictate your overall valuation.
Hey, really quick, I hope you're enjoying this episode. I just wanted to stop for a second and thank our sponsor, which is me. Nimble Capital Group is my boutique investment firm where we help passive investors access deals built for cash flow, equity growth, and powerful tax benefits. And if you think you've ever wanted to learn how to raise capital and become a GP yourself, I coach a select group of students each month, most of whom will raise over $500,000 within their first 60 days. So check the show notes in the description below to book a call. I'll see you there. Yeah. And now I wanted to get into this really cool story because I know that you left your corporate job to pursue real estate full time, but not only did you do that, you moved to the boutique hotel, the first one you bought. So this is a fantastic story. Why don't you tell us a little about it?
Yeah, man. So I had this feeling a commitment of, hey, if this is, we're going to take on investor capital, we're going to put this into practice and we're going to bring this vision to life. I needed to fully commit. And you know how it goes with contractors and renovations and just holding people accountable and holding them to a budget and a timeline. And even with us being out there, we faced our fair share of challenges. But yeah, it was 2023, which, looking back, doing all of this was kind of crazy because it really was just been a muddy past couple years in commercial real estate in general. And then on top of that, you're doing something that's pretty unique and not exactly standard. So yeah, man, I quit my job in September of 2023. A really good sales role, great team, great company, great founders. I, still have a great relationship with everyone there today. And it was just time. I saw something, I saw an opportunity, and we drove across country in my Tesla. I don't recommend that. It's an absolute nightmare charging that many times. And yeah, it was just feeling of just excitement, the unknown. And that there was only one way that this could end. Like, we needed to deliver on what we wanted to do. So got out there. It was really cool. We were, oh my gosh, my girlfriend hates me probably. When we got there, the inn was like full of spiders. It was like an old dingy property. It was not what it is today. So it was, it was a lot of waking up at 6 a.m. for contractors and construction stuff. And it was, a lot of those sort of game time decisions because each of the units was different. And then there was things you could do, there's things you couldn't do. And then, yeah, just everything with the county getting certain things with the power approved and getting, sauna and cold plunges and a deck built and all this stuff, and the pool permitted and bringing it back to life and all of that. Funny little story. The previous owners, they had a pool, beautiful pool. It was operating before them with the ownership before them, but they were so cheap, they decided to use the pool to collect rainwater to water the plants. Now, we still water the plants, but that is just a massive miss. I mean, it's the only heated pool that's commercial in that town. So people, it is like year round open to go in the pool. You can be in the pool around the snow in the middle of winter. So it's an awesome experience. So we did stuff like that. We brought the pool back to life, and we had been running over on our budget and on our timelines. So we were making decisions like we believe in the pickleball court. So we're going to fund that. We're going to put some money in. Let's get the pickleball court done. We know it's going to pay us back. And then when we started seeing the finish line, we put our website up. All we had was just a generic website, nothing crazy. We did a few videos, things like that. Our first booking, I was sitting there with my business partner, Isaac, and my girlfriend, Julie. We're sitting at the table. We're kind of stressed out about contractor stuff and timelines and all this stuff. We get a booking for 20 grand. That was our first booking on July 29th or 30th. That was just so exciting. That was an aha moment. Maybe it was 30 days away. And it was like, man, that is incredible. To give context, our debt service at the time was $18,000 a month. So one weekend is covering our debt service. And this isn't a majorly staffed property, right? So we knew it was like, okay, that's our deadline. We had a nice social event to bring some of the local restaurant owners, community. We were good friends with the gym owner there, and they all came. And literally an hour before, we're moving wheelbarrows, and like there was just stuff at the property that we needed to get fixed up. So it was very much a hands-on project, and figure it out, get it done. And yeah, this, looking back, we've been operating for a year now. It's been incredible. We've had close to 1,500 reservations, 5-star, 4.9 on Google. We have like 20 something thousand Instagram followers and additional Facebook and TikTok followers. And we've crushed it. It's been an incredible experience. And now we're replicating the model. Now we're doubling down on what we know works. People want those wellness amenities. People want to be able to go chill by the pool with their family or go play pickleball and have these like separate settings where you can kind of have that sort of experience. And it's been a lot of fun, and I'm excited to keep doing it on the Eureka Springs deal in Blue Ridge and some of these other markets that are they're really ripe for it.
Yeah. So you mentioned a couple things that I want to hit on there. So going back a little bit, was this your first time raising capital, or did you raise capital for the Airbnbs too?
I had raised capital for Airbnbs, not for our Airbnbs. So it was for a fund, for an Airbnb fund. And then we invested in a larger fund that was focused on purchasing Airbnbs across the US. So I'd raised capital because I was investing in that. I invested as well in that fund.
But you
I'd been buying. Correct. I was not the operator on it. So this was my first deal as an operator raising capital.
Got it. And so when it's other people's money on the line, it's a whole
move across the country, man. I don't lose people. Yeah, I'm not losing people's money.
Equity, right? Living on site with the spiders. And this is in Idlewild, California, right? So why don't you tell us a little bit about the property itself? How many units? What did you pay for it? What is there to do in the town? And I happen to know that recently, what did it value at?
Yeah. So we found the deal because we were looking in Palm Springs. We're very familiar with Palm Springs. A lot of our projects were there. And that's what actually prompted boutique hotel, because short-term rental regulation is probably the hardest in the world in Palm Springs, California. So we said, okay, let's get out of that world. Let's go boutique hotels. And we've been walking properties, and the prices were just not matching up. Nothing that we walked could pencil. There was still this value add component or this rebrand component that the prices were too high. And we knew that it was a great market and drivable from San Diego and LA. That's a part of our thesis of we need to be drivable from some of these large major metros, because if you think about it, your pricing a little bit out is way better than anywhere near the metros, but you can still, with social media, you can still attract people. It's not a big deal if you drive an hour or 2 hours out. That's nice. People want to get away. So we fundamentally believe in that. And that's when we came across this property. It was this quirky old inn. It was called the Fern Valley Inn, and it was all red. I mean, it literally looked like it was in the 50s, and it was this weird 2001 Odyssey theme. So you're going in there, there's like aliens all over the place. There's like a gorilla, there's chicken coops. I mean, the place needed a cleanup. And yeah, so we walked it. We saw some of these hidden amenities. So the pool, for instance, we walked over it. We're like, what is this? There was a huge putt course over it. And our realtor says, oh, well, that's the pool. And so the wheels started turning a little bit because the grounds were good. The space was good. The space was utilized well. It did have some really nice topography. It feels much bigger than it is when you're on there. And our creativity was really going out. We're like, if we can bring the pool back, there is room for pickleball. The courtyard's really nice. We could do weddings and stuff. And the price was incredible. So in Southern California, we purchased a 13 bedroom, 13 bathroom for $1.5 million, which was pretty solid, right? Especially when you look at there's a property right down the road that's a residential home that just literally sold for $3 million. So it's, not apples to apples, but there was a ripe opportunity in that market to come in there, add some value through design and rebranding and some amenities that no one else had, and then stabilize it, because that would really be able to improve the overall income and support that valuation. So yeah, we walked it, we loved it. We went through the whole nine with diligence. We almost weren't able to get insured because it's California. So the fire, you have to do California Fair Plan. We got that through. And then, the renovations took around 7 months. We've operated for a year now, and our valuation now is around $4.5 million with the stabilized value. So it's been really good. It's been a good first year.
From 1.5 to 4.5 in 18 months, give or take.
Yeah.
And I'm assuming that's based on revenue, right? So is that all rooms? Are you doing weddings? What all is going on there?
Yeah, so we booked $250,000 in group buyouts in our first year. So that's not even recognized revenue. So that's been the total bookings. Money to hit the account, the overall recognized revenue year one is over $666,000.
Nice.
And our NOI is over $300K with a few one-time expenses. So you look at like refinance fees or certain things like that we really won't be paying over and over again. When we add that back in, it's even more than that. So our OpEx ratio, like our operating expenses, we can do better, but that's cost of year one, really. You're figuring out a lot. You're figuring out teams. You're figuring out technology, what you need, what you don't. And then we're just getting better and better on the marketing side of the house with driving more of these higher ticket group bookings.
Right. And so I know you also own a property management company, and it came about through the managing of all these remote Airbnbs, correct? And is this management company also managing this hotel for you, or is that separate?
We manage the Pine Tree. So we have a third party operations manager that they have a team of, it's like a family group, and they manage all vacation rentals in Idlewild. So it's helpful because they're able to help us with a lot of the group buyout check-ins or daily maintenance stuff. So they've been an awesome partner in this. But yes, Second Homestays Management is the entity that's managing the Pine Tree right now.
Got it. And how long did you actually end up living there? I know you're back in Florida now.
Yeah, I was there. I was there pretty much until we opened, and on and off there throughout the first couple months of opening. There was a lot. We were transitioning from HostAway to Cloudbeds, which is our property management software, because we realized though HostAway was more tailored for short-term rentals versus boutique hotels and just the whole booking experience. So we hit some challenges there. The first couple months were kind of rocky. It was crazy. It was like a hockey stick. After we transitioned, our bookings like doubled. We were, 30 to 40 grand to like 60, 70 grand. So it was pretty significant, the jump in bookings when we got some of the tech stuff enabled. It's also why it's so important too, to kind of integrate your whole social media strategy with when people click on that stuff to actually go to the website and make it really easy for them to book. So, there are some learnings there. So once again, wanted to be really close to the project to make sure everything was going well. And your first couple months, there's going to be kinks. Cold plunges are going out, or not. People are heating the cold plunges, or people are jumping in the pool at 1 a.m. So you need to refine certain things to make sure that the guests are following the rules and the place is running well. So that's also been nice too, to just be there, be on site, and see how the property is being used and make sure things are set up. But it's humming pretty well now, in the sense of now we're focused on how do we incorporate the community more. We're going to do like a Oktoberfest event, which will be a lot of fun at the Pine Tree, and things like that, on how we can continue to improve the experience versus just operate it really well.
That's awesome. And at the end of the day, that's what brings the people. It's the experience.
Yeah.
Now, I don't know if you plan on moving into your next acquisition in Georgia or not, or if you took your learnings from that, now they're productized and you're able to replicate it. This is probably a pretty good segue. So at the very end of every episode, I really like to ask my guests, what do you do for balance? What do you do for stress? How do you stay healthy in being an entrepreneur? And you took this to a whole nother level. You've lived, breathed it every single day for a period of time. Now that you're back in Florida, are you going to do it again? Or, how are you staying healthy, sane, and fit these days?
Yeah, I think that, the whole thing is just trying to get closer to what you enjoy with life, and then hopefully having some businesses that are right there with it. So that's why I do feel fortunate. There's a lot of learnings, and I probably wouldn't have done everything the same way, but I think generally going out there, and it was a good disconnect and kind of reset. My girlfriend and I listened to this guy, David Sinclair, the whole drive out there. So then we're doing the glucose monitors, and we're doing early morning runs and cold plunges and stuff like that. So it was good to reset. I think I'm just learning that life's a marathon, not a sprint. So just take a step back when you feel overwhelmed. It's you moving, so you can stop moving for a second and take that moment in, and it's gonna be okay. Like things will work out, and then trying to make time for the things that you find enjoyment. Right? There's a lot of things. A lot of times with these deals, there are days you're going to work hours straight, get stuff done. That's important. And I think you need to commit to that. I mean, that's kind of what you sign up for. But then the days that don't require that, do make time for yourself, for the things that make you enjoy your business, your job, your life, all of that stuff. And a lot of times we are fortunate with that. I'm talking about setting up Oktoberfest marketing campaigns. It's really fun for me, and then being out there and having some folks that we've met in town that are other business owners and stuff. So those are cool things. And then getting to hop on and do deals with people like yourself and go have a good time and in some of these places is a huge benefit. I would say that's not a burden. So yeah, I think it's take a step back. It's a marathon, not a race, and try to make time for those moments that give you joy and fulfillment when you don't have the 24-hour days that you need to get stuff done. So it's that, I don't know if there's ever such thing as true balance, but knowing to try to prioritize the things that keep you level is really important.
Absolutely. Sometimes there's things you want to do. Sometimes there's things you have to do. They can't always live exactly 50-50 all the time. But I absolutely love that. So Tim, thank you so much for being here. Absolutely a blast. And I'm so glad I got to share your story.
Thanks so much for having me, man. I appreciate it.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.